Back with you once again to take a look at your grain markets in this particular segment here. I'm Marlon Bowling with you, and let's go ahead and dive right into our futures trade and get you updated on all the latest market activity in Chicago. Let's start with that corn market first. And on the futures board right now, we have the December contract a penny weaker. We're trading at 347 3/4. That's on the low of the opening range. But, you know, you consider today's range and the overnight trade, the entire range is only 2 cents wide, so it hasn't done much of anything. We have July 3/4 lower now at 378. Let's move on to soybeans this morning. They did have a little bit of firmness overnight. Didn't really carry through into the daytime session very much. They were only about 1 to 2 higher. Well, now they've turned and gone lower. So now you have November soybeans at 973 1/4. That's down 2. And January down a penny and a half at 985, just one tick from its low of the day. July down 1 1/4 at 1012 1/4. That's on the low of the day and almost 8 cents off its overnight high. If you look at the wheat trade in Chicago wheat, we have December down 3 3/4 now at 423 1/2. That's about a nickel off our overnight high. Kansas City wheat, we have December there trading at 422. That's down 3 1/4. And in Minneapolis wheat, on the spring wheat market, we have December now 3/4 higher at 617 3/4. New crop July a penny and a half higher at 640 3/4. Let's go to the trading floor in Chicago, find out what's going on with Todd Bubba Horwitz of BubbaTrading.com. And happy Monday to you there, Todd. A lot of weakness here in the grain trade today. What's up?
Happy Monday, Marlon. Well, you know, again, I don't know that I would get so right to weakness. I mean, we're really just in this range. You know, let's say corn 345 to 355, or maybe even 345 to 350 now. So we're really just not going anywhere. There's really a lack of overall interest right now in these markets, and of course, that a lot ties to the Dow Jones that continues to go up every single day. So that's part of the problem we're seeing. There's just no real activity, no volume or volatility, and I expect this range to continue. Now, I will expect it to break to the upside when it does break out.
Okay, I do want to bring up this cotton market too here while I have you on the line. Let's take a look at cotton on December. We are trading 37 points higher at 68.57 per pound. March up 42 at 68.53. Interesting, the cotton market firming up while most of the grain trade has gone lower. Didn't know if that was related more to the action in the U.S. dollar or if you've heard much in that regard here today, Todd.
No, I think that you're looking at cotton trying to reach that 70 level, and basically though, Marlon, the overall markets just don't have a lot of oomph to go, and they're really not. There's not a lot of action outside money coming in. It's more really just traders trading with themselves right now, and that's really kind of the markets and the action that we have right now, and that'll change. But right now, you know, there's not a lot of new money flowing in here.
That is that technical term I was searching for, oomph, they call it. Yeah, it's a highly technical term. I'm glad you brought that up.
Well, I want, you know, it's in the dictionary. I want to make sure you had it.
Okay, now what do you see happening here when we get our new harvest progress numbers coming out later on today from USDA? You know, we've been talking about this for some time. When they get to about the 60-70% harvest activity of completion, a lot of times then the analysts will say, well, then that's about it for harvest pressure after that. Now, we already reached that in soybeans last week. Do you think we'll get anywhere close in the corn yet?
I'm not really sure about that. I think that we will break to the upside, Marlon. I think the lows are in. I think this consolidation pattern, which is very obviously torturous, another term from the Trader's Dictionary for traders, is just wobbling back and forth. I think they will break to the upside basically no matter what happens. There's not a lot of reason I can figure that they're going to go lower here. There's been a lot of factors that were positive and negative, and now it looks like we will break to the upside once they decide to break out of this range, and that's the only question is when.
Isn't this normally the time of year, though, when the export sales should be ramping up?
Yeah, but I think a lot of this has to do today is with the equity markets and their overall strength, because basically because of the Federal Reserve, all the money, the new money we would call it, the alternative investment money, is going into the stock market, not the grain markets, where it usually goes quite a bit during the time.
Okay, Todd, we'll talk a little livestock market action when we come back. Our guest, Todd Bubba Horwitz, he's with BubbaTrading.com in Chicago. We'll be back right after this. November milk price is 3 cents higher at $16.45 right now. All right, let's go back to our discussion here with Todd Bubba Horwitz. He's with BubbaTrading.com in Chicago. He joins us live and direct right now. Okay, time to focus on the livestock trade, and they get the gold star today for all the attention and the big market volatility. Let's go ahead and take a nosedive in here in the live cattle and feeder cattle trade. Let's see what's going on. All right, there you have it. They rang the bell. December live cattle, $3 higher. That means, yes, they are, in fact, limit up now at $123.82 per hundredweight. Can't go any more than that now. February, $2.80 higher at $128.55. And we have April up to 13 now at $127.15. I'll point out, in case you're wondering, the October contract, the nearby contract on the live cattle, it does show it was up $4.82, but see, that one goes off the board tomorrow. So limits don't count there, I believe, right, Todd?
That's correct. And it is kind of surprising they were up limit, Marlon, but I would call this a short squeeze. This was people that were trying to sell up probably against 120, and it wouldn't break back below 120 in fats. And of course, now we're up limit. And again, I don't know when it's going to stop, but I would think this would be a, not today because we're at limit. I'm not going to sell them up limit. I'll wait. But I would think that somewhere here there's probably a pretty good selling opportunity and certainly a great hedging opportunity. We've had one heck of a run from 104 up here to 124. So I think that here is a great opportunity, either if you're a speculator to take a shorts position, or if you're an owner, you better lock some of these prices in. They're not going up forever. They never do. And this is getting to a point that's getting pretty interesting because we've been looking to sell them the last few days and they haven't let us sell them. So we just stayed in. And of course they keep ramping up, and that the feeders are, I think, even more overdone than the fats. So I'd be looking for positions to make sure that I'm covering my expenses here and make sure that if I was a speculator, working my way a little bit to the short side.
And if the market would go up, limit up on 2 or 3 contracts, then typically the trade will revert to what they call synthetic options trade to kind of figure out what the futures would be synthetically. Is that correct?
Yeah, they'll look at what the options are priced in. The options always price in the expected move and what the movement is. So if you look at a straddle, which is just a call and the put of the at the money strike, it tells you what the price is, what the option model is pricing in. So that would give you a hand on what's going on. But of course, you see there's still a lack of option volume here though right now.
Okay, let's look at feeders, see how they're doing. They had some big gains too today. On the feeder cattle trade, we have November up 332, January 347 higher now at 159.42, only one tick from our high of the day. Over $2 now off our earlier low. March up 295 now at 155.95. Keep in mind the limits on feeders are at $4.50. Now, if we look at the lean hog trade today, here on lean hogs, a little bit higher, not much. December 27 higher at 64.72, February 30 higher. Last trade now 70.55, within a dime of our high of the day. Are they being drug higher by the cattle?
No, I think they're working their way. They've been kind of in their own ballpark for the last few months, and I think they've reached kind of that peak, and they're kind of struggling. I think they were being drug higher by the cattle. They'd be a lot higher than they are right now. I think that the hogs are, 65 is my number to watch. I'm a seller below 65 in the hogs. And of course, what I'm really looking for is for these markets to pull back a little bit so I can get a better entry to get back in, because I do think we're going to have a good 2018. I think the fourth quarter might end up being okay, but overall, I think we've gotten to prices that are going to be pretty unsustainable here pretty quickly.
Todd, excellent stuff. Thank you for all the analysis on the trade. Appreciate that very much. Todd Horwitz with BubbaTrading.com. Quite a website. So, lots of activity. We do have a limit move. Some folks called for it early on, and they actually got it right.
It's funny because you brought that up last time we spoke. So interesting to see that follow-through action. Well, we'll see what happens today. It's interesting in the cattle market. All right. Thank you so much, Markets Editor Marlon Bowling.